We are now going to look at fringe benefits per the 7th schedule. Now, when we start out, you'll see this video which you're watching right now. We're not going to go into specific rules necessarily on specific fringe benefits. This is all just overall, almost like an introduction to it, but containing some very important things to be aware of. So fringe benefits are now discussed in the 7th schedule. Important again, the 7th schedule is, we refer to it as paragraphs instead of sections. And guys, when we are looking at the 7th schedule, you'll see that it's very specific rules and how to calculate these things. I've tried to summarize it in these notes for you guys nicely. The most important ones, or the important ones, are definitely given there. But what I want you guys to see is, please go and work with the 7th schedule as well. See where to find it. You have it in the exam with you. So please do look at it. Now remember, we are looking at it from the employee's perspective, the person who is receiving the fringe benefit. Right, they will receive gross income. So the first thing we need to understand about fringe benefits is that there needs to be an employer and an employee relationship. So if you do not work for me, for example, at all, you've never worked for me, and I give you a car to use, I say, listen, I feel sorry for you, here's a car to use. That's not a company car. There's no fringe benefit for you. Yeah, there needs to be an employer and an employee relationship. So a sole proprietor, for example, if you work for yourself, you've got your own little business, not a company, you can't give yourself a fringe benefit because you can't give a benefit to yourself. You can't be your own employer. A partner in a partnership, sole thing, that's a sole proprietor. You can't necessarily, there's no employer. You will see though, I will make the comment here, partnerships are now treated as employers. That it's not a general rule. Well, it's not. If you just look at, if you understand the principle there, it's not applicable. But partnerships are now treated as employers. Okay, I'll just add that for you also there. But please be aware, it's not as common. Right then, what you have to understand, what is the most important here for you to understand about fringe benefits, is the following, and that is that they want to tax the employee on the value of private use. The value of private use. Now, what that means is, if your employer gives you something which you use 100% for work, the idea is then that you will not be taxed on it. So, for example, I'm jumping a little bit ahead, and there's all specific rules, but this is just to get you the idea. If your employer says to you, here's a laptop, and you can only use this laptop at work. So every time you come in, you work at work. So it's just used for work, 100% for work. There can't be a fringe benefit. Right. So if you are given things which are necessary for you to do your job, it's not a fringe benefit. We're trying to tax you on the private use. Now, a couple of things that you are aware of. These are for all for discussion questions if they arise. Things that you need to be aware of. Paragraph I of the gross income definition in section 1 tells you. Remember, all of the paragraphs on the gross income definition are all the special inclusions. This is a special inclusion. It says you must include the cash equivalent as determined under the provisions of the 7th schedule of the value during the year of assessment of any benefit or advantage granted in respect of the employment to a whole of any office. Right. So they say you must include the cash equivalent as determined in the 7th schedule. Paragraph 1 of the 7th schedule, some important definitions. First thing is an employer. What is an employer? Because remember we said there must be an employer-employee relationship. What is an employer? It tells you it's any person who is an employer as defined in the 4th schedule, and it includes any company. Right. Now they say you must go look at the 4th schedule. What does the 4th schedule say? The 4th schedule says an employer is any person who pays or who is liable to pay by way of remuneration an amount. So employer is a person who pays remuneration. What is the definition of employee in paragraph 1? Okay, so you can just read through it, but it tells you it's in relation to any employer. It means a person who is an employee for the purpose of the 4th schedule. A person who is an employee for the purpose of the 4th schedule is a person who receives remuneration. That is the definition as per the 4th schedule. Right, and then please also note they say it also includes any director of such company and any person who was previously employed by or was a director of such company if such person is or was a shareholder of shares in one of the controlling shares in such company. And also if you, for paragraph 2H and 13, a person who has retired. Right. Basically what I want you to understand is you'll see there are certain ones. If the employer continues to pay your employee's debt, that's a fringe benefit where you can still be taxed on it. But otherwise you have to have an employer-employee relationship. Right. Then associate institution, just going to quickly mention it. This is a way in which, let's say, here's X Limited. Mr. A works for X Limited. Then they have some sort of scheme where another company, Y Limited, gives Mr. A a company car. And then they say, but X Limited and Y Limited are not, or Mr. A is not the employee of Y Limited. Now, in such a case, Mr. A can still be taxed if the following happens. If this Y Limited, they say is if the employer is a company, then it's any other company which is associated with the employer by reason of the fact that both companies are managed or controlled by the same persons. So, if there is a Miss Y that controls X Limited and she controls Y Limited, then Y Limited is an associated institution to X Limited. If that's the case, then Mr. A is treated as if he's an employee of Y Limited, so that will still be a fringe benefit. That's basically what this is talking about. Right, and also just here, any fund established solely or mainly for providing benefits for employees. Right, so that's like a pension or a provident fund. So if the pension fund here, the X Limited pension fund, that's a separate entity, gives Mr. A something. X Limited is an associated institution to the X Limited pension fund, therefore Mr. A will still have a fringe benefit. Right, then a taxable benefit. So this is the amount that is a fringe. A taxable benefit is the word that is used for a fringe benefit. So a taxable benefit is a benefit contemplated in paragraph 2. Now paragraph 2, guys, I'm just taking a little bit further down. Paragraph 2, I've just given you a list here. Paragraph 2 is the section that gives you a list of all the fringe benefits. So they're saying one of the fringe benefits. It is a fringe benefit, right? But it excludes, the following is excluded from being fringe benefits. Any benefit which is exempt from normal tax. So think about a uniform allowance. Right, when we studied uniform allowances or uniforms, if you receive a uniform from your employer, then it's exempt from tax. So that's also not a fringe benefit. They say any benefit that you get from a benefit fund for medical, so medical aid, is not a fringe benefit. Any lump sum from a pension fund, etc., provident fund, etc., retirement funds. Right, any severance benefit. Those are all exempt from being fringe benefits. Those are all to do with retirement. Paragraph 16 then says benefits to relatives. Okay, so here's Mr. A. Here's Mr. A's son. Mr. A works for X Limited. X Limited gives Mr. A's son a car. Right. Mr. A will still be taxed on it per paragraph 16. It says, for the purpose of this schedule, an employee shall be deemed to have been granted a taxable benefit in respect of his employment with an employer if, as a benefit or advantage of by virtue of the employee's employment with the employer as a reward for services rendered, the employer has granted a benefit or an advantage to a relative of the employee, right? Or anything is done by the employer under any agreement to confer any benefit to any other person other than the employee, right? So, I'm saying here Mr. A's son. Doesn't have to be Mr. A's son. It can be Mr. A's neighbor. Let's say Mr. A owes his neighbor some money. He goes to X Limited and he says, listen, please give Mr. A my neighbor a car to use. Let's make that arrangement. Then he'll leave me alone. Mr. A still has the fringe benefit. Right, so they say you treat it as if it was granted to the employee. Now, guys, what is the amount that we are going to be including in our gross income? We're going to do this calculation. We're going to say cash equivalent less the amount paid by the employee. So the cash equivalent is what we're going to be studying the individual rules. But let's say the cash equivalent is 100,000 rands. If the employee pays 60,000 for that, then the cash equivalent included in your gross income is 40,000. That's the idea here. If the cash equivalent is 100,000 and the employee pays 120,000, guys, there's then no taxable benefit. Okay, there's no negative amount or something strange like that. You need to know that for everything. Right, so here's paragraph 2. Paragraph 2 says for the purpose of this schedule and of paragraph I of the definition of gross income, see that's the special inclusion, a taxable benefit shall be deemed to have been granted by an employer to his employee in respect of the employee's employment, if as a benefit or advantage of or by virtue of such employment or as a reward for services rendered or to be rendered by the employee to the employer. And then they give you this. So this is all the fringe benefits that there are. Please, you have to work through all of them. Asset given to an employee, employer gives the employee right to use an asset, meals and refreshment, residential accommodation, free or cheap services, interest-free loans, subsidies, where they pay your creditor, where you pay your debt, medical aid, medical costs, insurance, and contributions to pension funds. Then also, just as a friendly reminder, not discussed here in a lot of detail, please go back to when you studied VAT and remember that there are fringe benefits. Attracts output VAT. Right, section 18.3 tells you that you have to calculate output VAT, and I'm going to make a reminder here. Remember, you must apportion the output tax on fringe benefits for exempt supplies. But this is obviously, this is when you study the VAT, you study this. So if you make 80% taxable supplies and 20% exempt supplies, you will do the VAT times 80%. That's the rule there. Okay, please also remember, guys, this VAT that you raise, the employer can claim as a Section 11A deduction under the general deduction formula.